Well, welcome, ladies and gentlemen. This is your host, Robert Roy. I hope you're all having a great day today. Let's go ahead and open up your questions box if you have not already, and keep that available there. And go ahead and type the number 1 in to let me know that you can hear me. And the answers are going to be fairly easy today. 1 for yes, 2 for no will be most things that I ask of you. Mike, how are you doing, Rob? It has been a while, Mike. How are you? I hope all is well. Hey, Rosemary. Robert, oh my goodness. It certainly has. And of course, Robert types in the word number 1. Oh, goodness gracious. Hey, Rick, how you doing, my friend? I'm doing good. I appreciate you guys participating there. Help me see what's happening. So let's go ahead and jump into our disclaimer. It basically says that I am not an advisor and cannot legally tell you to buy or sell a stock. It is against the law. The SEC, which is the Securities and Exchange Commission, requires you to be licensed in order to do so. I am not, and I do not want to be. So if you find a candidate, an indicator, a trade setup, something, anything that you like here today, my suggestion is you paper trade it first before ever putting 1 penny of real money into the trade setup or indicator, and then and only then would you do so, but fit your own personal risk profile and risk tolerance. Now, keep something in mind. Because I am not an advisor, that means I am not under trading restrictions. That means that I may choose to enter or exit a trade at any given time without prior notice. Oh my goodness, Robert, good to hear you again. Even though it's been a while, it only seems like yesterday. I agree, Robert. It's great to be back. And for those of you that are saying, wait a second, I've never seen this before. What are they talking about being back? Guys, I've taught Power Hour for quite a while ago, and we did this every week. And I know there was a little bit of confusion this week, and part of it was on purpose. And I'll explain my method to my madness in a moment, why I did it this way. But I taught this for a long time on every Monday at noon, and then wound up moving on to a different company and not having the ability to do it when I was there. So now that I am off and teaching on my own, I can pretty much do as I choose at this point. So let's talk a little bit about the confusion of what went on there today. And when I say the confusion that went on, it was all based on what, right? So you guys got an email when you logged in, when you registered, that said, hey, Power Hour, free webinar. You clicked on it to register, and it said Mondays, but then the email came up and said Tuesday. And I changed it. Ultimately, I changed it over to the Tuesday. And those of you that saw that originally were all students that were students of mine originally, for the most part, had seen that, unless you somehow came in through a back door and caught it. And guys, the reason for it is it's my planned chaos theorem, all right? The market is not chaotic where, oh my goodness, I cannot believe this just happened. This is horrible. Everything that happens for, we had it started before, so Mike said expected spectacular things here, but didn't expect Rob to break the internet or one for the books. It is. All right, so guys, I know you had some charts, some symbols listed in there, but let's go ahead and give me some symbols again. We'll start taking a look. Robert said, I told you wouldn't retire. There you go, Robert. Let's see. FAANG. I'm not even sure who that is. Rick, it's not, it didn't come up unless it was it FANG? Was it not 2 A's? Yep. Okay, so there's FANG, F-A-N-G, Diamondback Energy. Okay. Oh, okay. So you didn't want FANG. You guys are killing me. All right. So Netflix. Let's go take a look at Netflix. That was, let me see. Where they're going so fast, I can't see them. So Kareem. Okay, Kareem and some others that asked for Netflix as well. So I'm going to take down the symbol grid there, guys. So I've got a Fibonacci drawn on Netflix right now, right? So we came down to the 236 area right in here, and that 236 is known as hesitation. We had earnings pass already. We're down at the 236 and the 8-period exponential moving average. I do not have an intraday update done on this, so let me just start one now without updating criteria, and it should only take us, without running GoToWebinar, it takes me about a minute or two. And let's see what we get here. But guys, if we get the bounce off of here, we're looking at a move up to about 191. The biggest question is, can we make this work or do we need a Fibit inside of there? So we're looking at about $9 of Fibit inside. So 180 to 191. We need a Fibit in there, so we're going to split that level in half. All right, so we're going to put the 118 in there. Okay, so what I'd be looking to do, guys, is taking the bounce, I would look to scale out of some of the trade at that 186 level, and then back up here at 191.5 would be our next exit on our position. I like where this one is setting up. I've seen some spreads come across from 2 or 3 different people that I trade with and talk with that they're doing on Netflix right now, so that would definitely be something to consider. But I'm a bullish believer in stocks that make moves like this. So that pullback to hesitation right there at 236 was fantastic. All right, so a little pullback on today, so really not there. We didn't even get above yesterday's high. So I need the bounce. That bounce is going to be critical for us to take any kind of trade on it. All right, and we have CAR, C-A-R. Lisa put in CAR. All right, so CAR has earnings coming out on it, 2 days ago. The earnings were out, right? If we draw the Fibonacci on here, guys, we're going to come down from this lowest low. We're going to bypass that little tweak in the middle there and come up to that highest high. We've got at least $1 between the 50 and the 618, which is great. Excuse me. Same scenario. We had taken a nice bounce yesterday off of the 8 moving average, and look at where we are right now. And this is, slight delay on the data, of course, because it's delayed data. Well, we're sitting right at the 3104 and the 21-period moving average. So it seems the earnings were good, right, which caused that move up yesterday. But today's move down has been pretty drastic. It did break down below the moving average, the 21 and the 236. Let's see. If we, I think I'll put the symbol grid back. Let me go grab all symbols in here. And let me just do it again. All right, because I just want to see what the Fibit is. So the Fibit is $2.70, 31, 32, 33. So we're okay here. We don't need to split this in half. Right, earnings on CAR were yesterday. Did they come out after the bell maybe, Lisa? Maybe that's what it was, because the move yesterday was good. Yes, okay. So, guys, I'd be cautious on anything bullish with the earnings that came out. And again, I saw that move up. I just assumed that was the earnings that brought it there. But Lisa's saying, no, it came out after the close. So be careful here. If you get the bounce, that's great. Right now, we're going to wait for a retracement back to the 50 or the 618. See if we can get a bounce off of there first. TYME. Richard was, I don't think that was the right symbol, Richard. Nope, daily chart. If it is, if this is the right one, then there's just not enough data on it. It's a brand new stock, penny stock. I don't trade these. I wouldn't even have an answer on what to do with it. It's a guess one way or another. NVIDIA. Nick is asking for NVIDIA. I love NVIDIA, Nick. I think it's a great trading stock. You can see the move it made after its previous earnings. Good gap, straight run up. Pull back, guys. Look where we are. Right at the 618, we make 1, 2, 3, 4 standard deviation move. Guys, the 4-3-2-1 on this, had you taken the trade, was phenomenal, right? If you took the trade on one of these bounces in here, you exited 4 of your contracts here, 3 here, 2 here, and you were stopped out on this big candle right there of your last contract, right? Great move. But now we're up in the nosebleed seats, right? We're up above that 0 line. So 169, we'll call it, to 180. So we've got about an $11 move there. NVIDIA's Fibit is 10. Guys, for those of you that are not familiar with Fibits, don't worry, we'll teach them one day here in class. But to give you in a nutshell, if this number here on my charts, which is $10, if the distance between any two lines is greater than that, and that's just double the Wilder's average true range. So if that distance is greater, here it is, it's 69 to 80, we'll call it. So it's a $10, $11 move. We've got to split that level in half. Now you could just snap a horizontal line in there, but I have a 118 line saved on my charts, the color I want it to be. Actually, wrong line. It's not 118, it's negative. I need the negative one there. It's negative 136. There we go. So we split it in half. And look what we pushed into, guys. We gapped up to it today and pulled back. So on this particular one, Nick, it's a little tough for me to take a trade on it now. I need to pull back to the moving average, which will give us a confluence between the 8 and the fib line. So on this 168.50, and then we're at 167.84. By the time we pull back, the moving average will probably be up a little higher than that 168.5 is. If we can get a pullback and a close near there and a bounce, I would be looking at that 174, Nick, and then the 179-ish level as my my next two targets on there. But I do like the overall pattern. Was this Nick? Sorry, that wasn't Nick. That was Lisa. My apologies. AutoZone, AZO, AutoZone. All right, AutoZone has been very, 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 very ugly. Let's go ahead and clear that out. So what we're looking at here, we're going to draw our fibs from this high down to this low, right in here. Okay? So this gap down would have been its own fib, guys. So I would have had a fib drawn in here. Now, I have not looked at AutoZone in years because when I was tracking AutoZone, AutoZone was had horrible options chains on it. The premiums were insane. Let's see. We'll go back and take a look. Oh, Patty, you can always do intraday fibs on stocks if the patterns are there. Absolutely. I just want Option Station to open here before I play with it and start switching over to the intraday again. But right now, what we're looking at is we pushed down on this fib. We came back up, got near the 50, but not really a good signal. Not really where I want it to be as a good signal. So I want to see right now, I won't take a bullish trade on it. The 8 is above the 21, which is okay, but the 55 is still on the upper one. So that's a resistance for us right now. So we need to see the stock, ideally the stock pushes up and closes near the 50 and fails. And I would rather take the bearish trade there because that gives us that upside down H pattern, right? If we can do this, that gives us our upside down H, or not upside, our H, right? I know an H looks like this, except in Fibonacci speak, it looks like this, okay? So if we can get the push up and a close near the 556, look at 541 and 522 as your two downside targets. And guys, I'm not going to worry about the pennies on the chart. I'm giving you ballparks. About 522, about 541 are where we're looking. So I want to go look at AutoZone's options. And see what AutoZone looks like. And we'll look front week and see what we've got there. And the biggest thing was, open interest. And that's where we are right now. I mean, look at this. Look at our open interest for the front week. It's absolutely terrible. I mean, we're talking about, 535 stock. And what do we got? I mean, at the money has an open interest of 3. Right? We go in the money, there's nothing. You got to go out of the money to find anything. So now that's front week. Let's see what happens if we go to the full monthly, which is here. A little better, but guys, now we're at $10 increments. Just nothing about it excites me as a stock The market makers don't play nice. I mean, look at bid-ask spreads. We're over $1 on bid-ask spread. Here we're at a 75 delta, 1890 by 2040. Plenty of open interest. Right? So that's the reasons I have not focused on AutoZone. Yeah, exactly. Lisa said, I'm jealous. She's in an evacuation zone up there in Canada with state of emergency forest fires all around her there. I just wanted to participate with her. So, Rosemary, were you trying to tell me a stock with that, mineral lithium, or was that to something I said at the time? So, let's see. Mike had in MNT. All right, so MNT just recently had their earnings, $16 stock. It's not that Fibonacci's cannot be used, but guys, when you draw fibs on a stock, we draw it by the run. That was the run. We don't come from that low down here, because as we look at this move went from here to here. Whoop, I got stuck on my keyboard there. Let's do that again. So I will tell you, I just bought a wireless mouse for my desktop, and I absolutely love it. I need to change this one out here. So that move there, right? You have that move there. We have this move from wherever it may have started back here. They're all separate moves. We don't go from the very lowest low to highest high of everything, right? Well, when you draw that fib for this most recent move, we want to look at the 50 and 618. And I want to see, is there at least a $1 movement in between those positions there? And right now, there's not. So a fib on this doesn't work here, right, for where I drew it. So I'm going to actually just delete that fib at this point. I'm going to back up a little bit because I see this big move down, and we can work off of that previous run that took place. We're going from that highest high to that lowest low. We look at the 50 and the 618 and 1650 to 1728. Guys, it's still not even there. It's close, and here's the reason I say $1. A dollar move on the stock is one line to the next. That one line move, let me see, this is MNTA, right? That one line move there on the stock is yeah, Lisa, MNTA. That one line move on the stock is a 1 standard deviation move. So we only plan on 2 standard deviations ever on a movement of a stock's price point. Ever, ever, ever. Anything after that is gravy, right? So it just doesn't give us much. Here we have, let's call it 50 to 30. It's 80 cents. If I have a bid-ask spread of 20 cents and I'm only moving at 80 cents, now my option moves maybe 20 or 30 cents at best after the bid-ask spread, and add a little bit of volatility to the price, or they suck out some premium, and you're underwater even though the stock moved in your direction. If you are looking at this one, though, I'd look for that 1728 and 1828 move to the upside if we get that bounce, but I am just not a fan of it at all. Let's see. Surely, so the reason fibs don't work on the MNTA is the move between the 50 and the 618 lines. And maybe I talk too fast with it because I just know where it is and what I'm referencing. That's 16 and a half and that's 1730, right? Close enough. So the distance between these two lines, my preference is that it is a minimum of $1. If that's a dollar move, keep in mind, if we took a bounce off this line, I'm not getting in at the line, I'm getting in at the bounce. So let's pretend the distance in here was $1. Right? I'll make my own numbers up. This is 59, and this is 60 up here, right? And my bid and ask spread of my position is 10 cents. That's the bid-ask spread. So we've got a small bid-ask spread. Where are we going to get in here? You know, our entry is going to be what? 59.20, right? Got to give it a little bit of bounce. Where's my exit, right? At let's see, 59.80. I only have a 60-cent move, right? I have a 70 delta. That gives me a 42-cent move on that 60 cents. Plus, I have a 10-cent bid-ask spread, so I'm only looking at 20 or 30 cents of profit for a $1 move on the stock. So the reason for at least $1 is at least I have an opportunity to make something. If I drop this down to 60, 70 cents now, and it makes its move up, I'm going to exit something at that first line. I'm only looking at 10 or 20 cents with a move from one line to the next. It's just not enough profit. So you're welcome, Lisa. Does it make sense to you then? All right, perfect, 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 perfect. All right. Patty said, hope you and your wife are feeling much better. Yep, she is doing great. Thank you, Patty. Yeah, Kareem got it for Rick. I'm in symbol mode. I'm not thinking Facebook, Amazon, Netflix, Google. I'm not thinking there at all. Let's see. Robert's asking for Trip. I don't think he's here today. Let's see. TRIP. So we have earnings coming out on Trip. I don't know if this is before or after market. Robert, do you have any idea when this is coming out? Or does anybody else know? Is this announced already, or is it coming out today at the end of the day? Certainly a different way I would look at it. As far as the fibs go, that's going to be standard no matter when they're coming out. Actually, it's going to be to here. I'm going to come off of that bottom right there. It's aftermarket. Okay, so obviously we'd want to wait to see what happens with that. We do have a slight uptrend going on here, right? The 8 is the, okay. When we look at the moving averages, a couple of things are happening there, right? First thing is we are above the highest moving average, which in this case is the 55, right? That's number one. Number two, the 8 is not the highest moving average, but I am okay as long as the stock is above the 8. But I would be a little bit more, I would consider it a little bit more of an aggressive trade this way by taking it here as it's above the 55 and not necessarily where it's above, the 8 is above the 55. Right? So in other words, I want to see the pink line to be higher. The brown one should be all the way at the bottom. Okay? So, excuse me. Depending on what happens from here, Robert, I do like that we are right now above the previous highs that we've made as far as closing highs. So if this were a closing price, I do like that very, very much at this point. Right? We're looking at that 41.25 and 43 as our two upside targets. If we get bad news, we're looking at 38 and 35 on the downside. Now, Kareem, the reason that we stopped where we did on the fibs there, the reason we stopped where we did on the fibs is because we draw from VTOPs. Let me change this color. I don't really care for this black. It's just very much a nuisance. Okay. So we have a VTOP up here, and this is our first V-bottom, right? Because if we would have gone down, we have another V-bottom here, and then we have another V-bottom here, and if we keep stair-stepping it, guys, you can measure off of those, but every time you go beyond the first move, you lose the validity of that Fibonacci itself, I guess is probably the best way for me to say it. So, oh, Kareem, you said, okay, I got it. Perfect. All right. So let's see. This was, Robert was asking there for Trip. Tesla. And that's Dina. Tesla. Okay. So guys, Tesla is setting up right now for a Fibonacci 4-step. So what is a Fibonacci 4-step? We're going to go ahead and add a line on here. We're going to add an 882. I have 2 of them saved. We're going to use this black 882 for our Fib 4-step. And what a Fibonacci 4-step is, we're going to, if we get above that 367.20 on a closing basis, ideally it closes up higher, closer to that 377 line, but it doesn't have to. right? It can go higher than it just cannot close above it. If it does, the trade is over. So first step, close above. Second step, don't go above. Third step, come back down below the 367.20. Either take the breakout or let it close, retest the 367.20, and then take the bearish trade. But what we're looking for here is our entry is going to be, as long as the stock stays within this range on a closing basis, we're good. Once the stock comes back down and closes below the 367.20 level, that is when we start getting into bearish entry territory. Our target is 354.96. Either you take the breakout right here, or you wait for a retest and a break off, and then we look for the move down to that 354.96. All right, but that's the trade setup. I love the setup. It's a great setup for it. Today's move was fantastic at 11, almost $12. Move to the upside on Tesla. It can go above. It just can't close above that 377 level. That would negate the trade, and the Fibonacci would be negated as well. And then, Dina, you had Visa. Okay, so Visa, let's go back and look at a slightly bigger picture. I'm going to delete the channel off of there. Let's go grab the Fibonacci. Steele, give me a second. I'll go back and talk about that. All right. Perfect. So look, right, we have a nice Fibonacci on there, a good breakout to the upside. We broke above the zero line, right? When we broke above the zero line yesterday, right, what's the zero line? This top line right here. We broke above it. Well, let's back it up to here. We broke above here. Now, some people will take the breakout of that zero line. And you can. My problem with the breakout of the zero line is, let me scrunch this down first. Okay. My problem with the breakout of the zero line in many cases is this is exactly what happens. It breaks out, it becomes a here kitty kitty, and it pulls back, right? We broke out again, and we pulled back. Now, we closed above there. Okay, I like it now. I like it much better now. What I'm looking for is a retest always of support. This old resistance, 101.18, now becomes new support, right? We get to move to the upside, all right? At that point, you're looking to take that bullish trade, and ideally we're taking it up to that 103.35. Now, let's see. We've got $2.32. Yeah, so we don't need a fib in here. There's no reason to split this line in half. So our target is 103.35. My stop is going to be somewhere down below my 101.18 level. So not a full dollar in here, guys. It's close, and that's really what I want to see is it's close. I don't go, there's no rule that says a dollar. It's just what I use as a guide. Let's see. All right, so I lost some of the stocks. Oh, no, we got them both, Dina, so no problem there. Veterans on car, okay. Sonia's asking for big airplane. You're welcome, Dina. No worries. Big airplane. Oh, what phenomenal earnings. Guys, I was at an event teaching when this took off. I mean, it's just wonderful, the move that they made there. It actually presented some of the biggest moves in the Dow for a couple of days were Apple and Boeing were the reasons for the move. The biggest part of the move in the Dow were those two stocks. Boeing has absolutely taken off. The earnings were fantastic on them. We've got a nice Fibonacci drawn in there, slow and steady burn for a month and a half, whatever it was, and then we explode on the earnings. We've pulled back. We're still in overdrive mode right now from the earnings time. That's the one thing about it is it's still overdrive. So what I need to see happen is close near the 8, give me the bounce, and then we'll take the bounce and look to play it to the upside. We definitely need to split this line in half here. And guys, you can do it any way you choose. If you don't have 882s on your charts and so forth, that's okay. Actually, it's not 882, my bad. I keep putting the wrong line. So it's the 118 line. Where is that? If you don't have that in there, no worries. You're just going to go ahead, you're going to grab a horizontal line, you're going to pretend it's these two lines, you're going to eyeball it, and you're going to snap a line in the middle. NetEase. That was Rick. So I have a bigger period fib. Oh yeah, this fib is still good. So Kareem, I think you were the one that were asking before it was about drawing the fibs. Okay, so we'll use this as another example, Kareem, right? And I'm not singling you out, just that you asked the question, so it makes me feel like I'm talking to somebody in particular instead of a computer screen. There's the V. Nice steady run up, good run up, and then there's the fail, right? Oh yeah, no worries. We get this move down. But Kareem, look what's happened now. You see all of this stair step, and for all of you, right? This stair step, if I were to draw a new fib and start using this stair step, where do I go? I mean, if we went another 6 months and we start stair stepping again, do we use, you know, the stair steps all the way up here? So we try to get it off of a definitive run. The rule, or the way I say it is, we're looking for the biggest movement in price, the biggest directional movement in price closest to the right side of the chart. If I clear all of this off right here, and let me just clear it from my toolbar. If I clear it all off from here, and we look, this move in here is the biggest directional move I have. It's bigger than this one, down, and then again, that would be my move, that would be my move, or that would be my move. Actually, we've got almost same size to the downside. So that's why we choose some of what we do. All right? So back to this one, NTES, we broke above the zero line. Now, guys, the last time we broke hard. We came back and tested, and we failed. Okay? Oh, darn, but we failed. Yes, but guess what? If you had snapped a line in the middle to take profit at the center point, you would have taken profit off of this trade and been stopped out of the second half. You would have made a little bit. It would have cost you a little. You might have broke even, but it would not have cost you a big hit on that breakout and fail. The next time we broke out, it never came back and retested. This one went to the middle. It hesitated for 3 days, and then it took off. Scale out of half the trade, take it up to the top. So we're back in the same place, right? Come back and test the 308.66, bounce, and we're looking at about 322 and 334 approximately are going to be our targets there. So Rick, you were asking for FANG, so let's see. Here we have Google. Google right now, oh yeah. So we've got higher lows setting up inside of this fib, right? We have higher highs setting up inside of the fib as well. All right, so we have this upward channel going on. We're bouncing near a 236 level, which is support. We are under the moving averages. That's my only concern with this position is we've gotten under the 8. The 8 is actually the lowest moving average. For me personally, I don't take these types of trades, at least not for my long directional. I will day trade them, but I will not take the longer directional moves on them just because of the risk I stand to that I inherit by picking this up. So, excuse me. If you pull back to the trend line and got a bounce, great. You know, I would love an intraday trade off of there. You can see we did it a couple of days ago, good bounce. If we can get back again and bounce, I would definitely take it there. Quite a few of you have Facebook up there. So Facebook, good move on Facebook, good pullback. We went right back to the 236. Guys, if you're ever questioning, is the Fibonacci drawn in the right place or not, right? If you ever question that, when we get this pullback all the way to the 236, which is hesitation and a bounce, you can pretty much state that you are in probably a really, really, really good place on this chart, right? To have your fibs, drawn, right there, right? So I like the move, good bounce. You know, we're close to midpoint there, guys. So if we fail, we're looking for a 118 line. All right, so you can see we pushed right up to it and broke out. If we fail, we're going back to that 169 level. If we continue up, 174.5 is our next target on it. And above that on Facebook, we've got 183. Let's see, 75, 83 is 8. Yeah, we'd have to split it. We need to fib it in there. So we would need to add the negative 136. Perfect. All right, so 179 and 183 would be our upside targets. So Tesla. Steel, I think it was Steel that had put it in. Yeah, I don't understand. Tesla does so well even though it doesn't make any money. Takes me back to the dot-bomb days, Steel, when everything is going up like crazy and they've got PE ratios of 2,000, 5,000. It was insane what people were paying to get these internet type companies out there. So Tesla has a story. Elon Musk, I think, is liked very much by Wall Street. He's cutting edge with technology. He's vibrant. People are betting on the anticipation of this stock of where it goes. That's what I see with a Tesla. It's not the news of we're making money today. It's when we start making it, we're going to kill it. I don't know if they ever will or not, right? The cost of oil and gas right now being so low, I don't know if we ever get back up to $100 oil, especially if the pipeline with Canada does actually get resolved. Canada's largest natural resource is oil. We are one of the largest oil users in the world. So, duh, it makes sense if we can get our hands on it. I think we'll get it higher than the 50. 50 is a bad price. OPEC has just fought tooth and nail, even though they say they're going to do it. They have fought tooth and nail to, let's see, guys. I just had an alarm go off, so let me go see what just happened. All right, so oh boy, look at that fail. Oh, guys, look at the move. Straight down, pulled up to the moving average, kabam! 87.71. We're looking at 16 ticks, actually 90, 70, about 20 tick move to the downside on that candle. Very nice. This is the YM. This is a futures contract, guys. Wow. Okay. So I think a lot of it still comes back to the likability of Elon Musk and certainly the likability of the technology that's out there. I think we're going to move more in that direction, but without prices of oil going up, I just think it makes it a little tougher. Okay. Let's see. So Rosemary said, looking for raw material lithium. How do we find the mineral as a raw material in the market? I don't know, Rosemary. I mean, futures is probably where it's going to be. You may have some stocks that do it. It would just be legwork, I would guess. You're on Google searching for it would be one. The second is you could ask the broker to give you some of that as well. So Sonia was asking for Twitter. You're welcome, Rosemary. Okay, so Twitter. Holy mackerel. So my initial response is to draw a fib. That's number one. My secondary response is it ain't going to work. Let's see. 18.18. There's 50 cents in there. Not even. Right? Yeah, 58 cents inside of there. Terrible. Not a big enough move. Even if we went back to a previous move, well, maybe. Let's see. This is okay. So, guys, pay attention to this one. Some would say, should we stop there? The answer is no, because I would consider this all to be a sideways move here. Sideways is okay. It's just stock slowing down. 17 to 1762 doesn't work. So I'm going to remove the fib off of here. And if I were trading this one, my goal would be to trade the downside as a reversal up to the 8-period moving average with a gap fill as my target at $14.72. So Twitter doing horribly. Snapchat getting their head handed to them since their IPO, right? From around $30 and now at 13. And look where they are, rolling over at the moving average, earnings coming out on the 10th, which is 2 days from now, so Thursday, they're coming out, right? Got to be really careful with them. I mean, you can't even really short them much. Where do you go? I mean, how far down can it make it? All right, Mike, appreciate that. Let me see. There we go. Twitter. Did we look at Baidu? We did not. Okay. So guys, look at the move up on Baidu, the pullback right to the 236, and the bounce. Good place to draw the fibs. Now we broke out. Excuse me. And guys, you've seen, those of you that have been around me for a while, you've seen me do these types of analysis that are drawn on my charts, right? So we're looking at, you know, trade setups on here bring us in $5,700 on a $13,000 investment, 42% in a couple of weeks on Baidu, right? Great trade setups. Well, we're at the same point now. We had the move up, the pullback, and the breakout. So what does that do for us right now? Let's see how far I can go. Okay, perfect. Just want to zoom as much as I can. So my fib on this is $11.50. So is the distance between 230 and 243 greater than 11.5? The answer is yes. So I need to put in a negative 136 line there, or split this in half. There we go. Okay. So guys, what I'd like to see is this close to the upside like it is. Come back, retest that 230 level, and bounce. And if it bounces, look for that 237 and 243 levels as your two upside targets. Right? On the downside, somewhere down below 230 would be my stop. Yes, Robert, that is Rosemary from Georgia. That is correct. See, it's like old school week, right? It's like being back at a family reunion. Actually, I like that a lot better than a school week. My kids are dreading the word school of going back. Lisa, I do trade the rut. I trade it primarily with spreads and condors. I don't really directional trade it at all, but I do trade the Russell 2000 on futures. So as far as Fibonacci's go, tough place to draw. So Kareem, back to you again. In absence of a good directional move, we could allow a stair step in there to be entered in, right? I've got a big directional move here, and the nice thing about being able to do this the way that I do in a platform like this, I get a drawing tool, which you probably don't have access to on many of your charting programs where you could do things like this and just freehand draw. And you can see this stair step that's taking place in there from here to here, right? Well, instead of me guessing on my charting program here, on my trade nav, I can measure these moves right here to see what my distance is. So I have 81.86 and I have 80.33. Well, there's no reason to use the stair step, right? We're going to use the first Fibonacci, first one that I drew that a line on. We're going to use that as our fib lines right in here. Okay, so there's our fib. I like where we're sitting right now in the overall pattern. We're using that 55 the last two times. We're using it as support, so I'm happy with that. But I would want to see this get above that 1425.70 level, come back and test and bounce. And if it does, then we've got to determine how far can it move up, and we definitely need to split this in half here. We need a fibit in there. And a fibit, guys, as far as the name, it's a Fibonacci pivot is what it stands for. I've been teaching about these things for 6-7 years now on Fibbits, right? So we would look at that 1437 level and that 1447 level. Yeah, still, this is, still, as you guys hang around with me, guys and gals, of course, but if you, as you folks, I just don't like that word, folks, as everyone is hanging around with me and learning more about my style and my strategies and how I teach and I introduce some of these things to you, you're going to find Fibonacci's to be something that you're going to ask yourself, how did you ever live without it? I went to an event, a stock market education event that was in my area. I went to the free class that they had, right? I just wanted to go and see what they were doing. And I ran into somebody who was working for them. He used to work for a company that I was with. I did not know this guy. He had been in my class before. He'd taken all my online stuff. I had no idea who he was from face. When I walked in to say, you know, I'm here to register, sorry I'm late, and he grabs me, shakes my hand, and takes me outside, and I'm getting ready for him to escort me away and saying, you can't come in. And he says to me, Rob, I need to thank you. I said, okay, thank me for coming late? And he laughed. He goes, no, I'm guessing you don't remember who I am. I said, sorry, I don't. And he told me, you know, who he was. I remembered the name, but I didn't remember seeing him or meeting him before. He said, I got to thank you because I use Fibonacci's to this day religiously. I haven't worked with this guy in, goodness, 8 or 9 years at least, right? He said, I use Fibonacci's religiously in everything that I do trade-wise. He said, they are awesome. So, guys, as you start learning about these different pieces of it, realistically, you know, you may say, well, just show it all to us. Guys, I had 11 or 12 hours of DVD just on Fibonacci's that I used to offer, right? That's how much stuff, and that wasn't everything. That's just what I had on DVD. So I'd like to see it get above the 14, 25, 70, Lisa, come back, test, and bounce. That would be my comfort level. Anything I took earlier than that would be an intraday trade for me. So Robert said, Rosemary, Robert said, okay, I got some lithium tickers for her to look at. He'll text. So Robert's going to text you the lithium tickers, the stocks to look at. You're welcome, Lisa. She said, awesome. Thank you very much, Robert. Appreciate it. So, guys, let me go ahead and grab this here, right? And I had everything open. I was so ready for you guys. I mean, it was just awesome. And then crash, boom, and it's all gone. It actually should be changed now. That, guys, you would have, many of you registered when you got an email from me or from Lisa or whoever it was, another company that I'm working with. You registered and you saw this, you know, free power hour. You went into this link for the power hour. And you'll notice that this page has now changed, right? It says, join Rob for his free 1-hour workshop. It says we need to change it to every Monday as, my programmer is in India, as 12 p.m. Eastern, right? So it said it was Tuesday before. So when you come here, guys, and you register for a free account, right? You go to members area, you go to members. If you're not registered, it's going to say, you know, log in or register, and you'll be able to do that right from there. Any and all of the tools that you have available to you will be on the left. So including some of the free, and we're breaking this up. It's going to go in 2 separate sections. But anything including the free will be on your My Account page. So if I wanted to go and look at what options videos were available right now, it takes you over to the videos for the options that are available. If I wanted to go back in and look at, you know, if you had some of the paid tools available, so such as Covered Call Explorer, which I want to talk about a covered call, guys, because you need to be looking at these, actually an advanced covered call, but you need to be looking at these types of positions. So it takes you into the bonus materials. It takes you into the current videos as well that you can watch, right, along with the tracking sheets from each of them, right? This Wealth Builders HQ TV is going to basically link to our YouTube channel. But I'm not a fan of even playlists and such. I'm not a fan of how YouTube does it. So we're going to list all the videos out here by category of where they are, and you'll link to it and go right to the YouTube channel to watch it instead of searching for it. But I'm going to ask you guys to help me out a little bit, and If you would follow us on Facebook and Twitter is still my old Twitter, guys. I'm not using this one yet. It's Rob, R-O-B, Roy, R-O-Y, Fib, F-I-B, Trader, T-R-A-D-E-R, Rob Roy Fib Trader. The YouTube channel, the Instagram, just go ahead and follow us on there. And guys, I put some charities on the bottom here that I support personally, all right, from my business and me personal. These are ones that are important to me. If they have any value to you, any importance to you, some give back of what you make trading or what you make, you know, because of what you learned here, you don't need to tell me about it. I'm just telling you anything you can do to help some of these places. I mean, St. Jude's, who goes out of their way to give free medical to anybody. The family travels for free, stays for free, no cost to the family. Wounded Warriors and so forth. Really important stuff. But again, that's just me. I'll get off my my soapbox a little bit there. Guys, as you come into the tools section, you'll see some online workshops. We're working on this one now, but I wanted to show you because it's been asked for so often. You will see later today or tomorrow morning, you'll see the new Monster Market Movers coming up here for August 31st. Right? There's the previous one I just taught, which was August 3rd, is on demand, and there's a Cheapskate Trading on demand as well. You'll be able to get access to all of those. But come in here and enroll for a free membership, guys, and come and see what's in here, right? We've got a blog set up on there. There's one post in there now. I've got 5 or 6 other articles waiting to go up. There's so much to do in this, and I don't know if you guys realize we didn't just throw some simple WordPress site together. This is from an experienced programmer. This is somewhere near 70 hours right now of what we've done to this site, and that's a full integration into a CRM program in the back end. Where we can track your subscriptions. I don't have it on spreadsheets. You're not worried about did I really get all my weeks in there. Everything is done automated in our system there. So, but let me share with you guys. I want to talk about a type of a spread, which is a diagonal spread. And let me just grab this tracking sheet. Got to see which of my 6 monitors it's going to decide to open up on now. Okay, there we go. So Patty said, I'm glad I just happened to look at your Facebook page and saw that you were having this class today. I meant to put it on again today and never got a chance with other meetings and stuff happening. Yeah, Rosemary said, thank you for cranking it out again. Answers to prayer. So guys, I do this service called Covered Call Explorer where I put a list of covered calls together, naked puts together, and diagonal spreads. This is an example of one stock, and I just want to show you the date where we went ahead and did this on June 19th. Right, was the first one we did. All right, so I want to go to AMT. And I'm going to go over to a template with no moving averages on it. And that's the 17th. So let's see, I need June 19th. So right there is the first time I announced this stock, right? And actually I really do want the moving averages on there. So it's the first time I announced this stock. We got our pullback, we took a bounce, we take the entry into the trade. We gap up on some news, we come back, we break the moving averages a little bit, we're still okay, we come back up. Every single week, guys, if you were able to do this every Monday from when we listed this, and let me just go back and draw all these lines in there. These are the Mondays. I do this on a Sunday. This is on a Monday when you would take the trade. Earnings came out, so you would have done a protection mode. We had no diagonal there. We had a call only protecting it. At that point, a put rather. We bought a put to protect it. But guys, this was the results on that trade. You know, starting out that day, we bought the October 20th, 2017 125 call at $10.10, right? And then we sold the June 23rd 134 strike, and we sold it for 25 cents. We had to lay out $9.85 out of our pocket per share to control in 100-share increments this share of AMT, right? It was a 2.48% rate of return, which may not sound like a lot, but guys, that's for 5 days. What that means is that 2.48% rate of return is 10% for a month. So I'm not complaining about it. If we would have been exercised, we would have had $9 of profit, but we spent $9.85, which means we're underwater by 85 cents. And it had a break even of 3.4 weeks that we had to do this if we were, instead of getting exercised. So we have to manage the trade. Unlike a covered call where you'd make money right away if you're exercised, that's not the case in this type of a setup, in this type of trade, right? Well, every week then, I have covered call premium listed every week from there. And you could see we took in $3.14. I just added this column up, right? On August 11th, so let me back up. On August 11th now, right, for the August 11th expiration, right, is what we sold there. And we sold that one at 48 cents. So we originally had the 125 that we bought at 10.10. We now sold the 139 where we originally sold the 134. So we've increased strike prices by $5. We've taken in $3.14 on this trade. We now have a cost basis of $6.96, which gives us a 31.09% rate of return to date on what we've received. And we have $14 of stock profit. That's not profit, that's stock profit. In other words, if somebody wanted their stock at 139, I could buy it at 125 and give it to them at 139. That's where the $14 comes from, okay? Well, I still have $7 of cost in there, so I'd be up $7 on my initial $10.10 investment. Yes, Rick, we would need to factor that, the cost of that put in there. Absolutely. Sure would. Yep. This example only goes through, every week if you had traded a covered call on it, right? But we're looking at 31% rate of return on this position. Take add the put back in at 52 cents, I think I paid for the put, and you're still looking at, if you went and just changed this to 275, we're still looking at 27% rate of return on this position by taking that put out of the equation, by adding that put in there, right, on that position. So, yeah, it was a great example, Rick. Exactly. Rick said, dang, nice example. It was a great example. But, guys, this is the type of stuff that we do in Covered Call Explorer, right? So Covered Call Explorer, guys, if you go to that page, you can enroll right there, and I encourage you guys to do so, right? Let's see. Let's go back there. It is a great tool, right? Now, this is going to be under Market Alerts, and there will be others added to this. Maybe Fib Finder comes back again, right? You go to subscribe now. It is a monthly subscription, right? $119 a month is your subscription. It auto bills at the $119, guys. And you get access immediately once you subscribe to the 4 videos that are up there now from the last 4 weeks, as well as the bonus materials that are there. And guys, if you guys came over here from Lisa or from another group, they're going to send you links for you guys. They have some special offers and such that you guys may have access to, with some combined with some of the things that they do. So you can want to take advantage and use that. My students, guys, the ones that came in here from me, you're going to, this is where you would access it from right here. All right. We got E-minis. We've got, guys, there's just so much going on. Very soon, guys, you're going to see the Market Insights come back again, which is where we analyze stocks every week, twice a week, going over various stock positions and trade our 20 candidates. And those of you that remember, on average, we never had a year for 4 years that we made less than $1 million on our 200,000 or less account on our trades. So we'll be back to teaching that one again as well, right? So, guys, tell me, take out the fact of the little bit of hiccup on the startup there. What do you guys think? Was this worth your time? I got almost every one of you still sitting here. So, and I know some have to leave for lunch and things like that. Was it worth coming out and hanging out and spending the last hour-ish? I went a little bit over. Cool. Robert, definitely great to definitely great to get you back in the fold there. It's I miss talking with you. So Lisa said, how can we access the recording of this class? Lisa, it's going to be on Wealth Builders HQ TV is where it will wind up. I don't know if I'll get it there today, but my goal is to try to shoot to get it out there tomorrow before I leave, because I am on an airplane tomorrow. So you need to register as a member, free member, and then you'll get access to that right behind there as well. All right, so Rick said, as always, picked up some nuggets. If there's a recording, I'll review it and add to my trading plan notes. Cool. Yeah, I know, Nadia, it's fast. We are going to put it up there. So, Nadia, just make sure you're registered. Make sure you have an account. And, guys, those of you that came in through the link that Lisa gave you, if you try to log in with just your email address and just say you forgot the password on the members page, I'm pretty sure you already have a password, but you'll find out very quickly. So if we go back to members area here, to the members page, and you click register now, right, if you didn't have an account, but if you, when you logged in here, what I'd want you to try first is forgot your password, put in your email address that you would have used to register here, and it will get you access. If you have an account, it'll change the password for you, right? Very, very awesome. Well, ladies and gentlemen, Mike says, most definitely so stoked about Market Insights. Yeah, me too. I'm looking forward to getting it started. What else? Boy, these things just went by so fast. Very good. I just want to make sure I get your questions answered before we hang up. Thank you for today, Rob. Patty says, yeah, that's awesome. Have safe travels and make sure they have all the wheels attached for the proper and safe landing. Yeah, Robert, just got to remind me about that plane ride. All right, ladies and gentlemen, I think I got them all. Have a wonderful day. God bless, and I will see all of you at next week's Power Hour. Make sure you register again, because you're only registered for today's. There's no subscription to this. It's a free class. You got to register for it. I'll send out some emails again, and so will Lisa. But you guys have a great day. See you all soon. Bye now.